Hello and welcome to the status report overview for SKAGEN Kon-Tiki in May. Let's start by taking a look at the highlights for the month. Kon-Tiki was up 7.9% during May, outperforming the MSCI Emerging Markets Index by 2.3%. Year to date, Kon-Tiki is up 5.7%, which is 1% ahead of the benchmark. We added to 3 existing positions in May and exited from 3 other companies. May was a strong month for emerging markets generally, led by Russia, India and Turkey, as geopolitical risk factors faded in these countries. Emerging markets now trade at a 30% discount to developed world markets, although the risk premium built into developing world valuations narrowed during the month. We believe the Kon-Tiki portfolio remains attractively valued on both a relative and absolute basis. More on the valuation later. Now let's have a look at the month's largest contributors and detractors to performance. Firstly, on the positive side, Hyundai Motor, an 8.8% position in the fund, was the top performer during May, as the Korean car manufacturer announced strong sales figures both domestically and abroad. State Bank of India, a 3% position in the fund, was the second largest contributor to performance, beating earnings expectations due to improved operational efficiency and asset quality. On the downside, Great Wall Motor, a 3.3% weighting, was the fund's largest loser. The Chinese auto manufacturer's share price fell by over 20% on news of a second delay to its high-end H8 SUV, with no new date for sales to resume. Banrisul, a 1.4% holding, was Kon-Tiki's second biggest loser, as the Brazilian bank announced disappointing first quarter results, impacted by higher expenses and increased loan loss provisions. Now let's run through the main portfolio changes during May. Firstly, we increased our stake in Bharti Airtel as we believe the potential triggers for a significant share price improvement in the Indian telecom company are starting to materialise. Mobile voice prices continue to slowly increase, data consumption and revenues continue to grow, and the regulatory outlook continues to improve. We also increased our stake in SBI Holdings. The Japanese broker reported weak fourth quarter results, which is typically a cost-heavy quarter. However, our investment case is based on the growth of internet-based services, which remain on track and which we believe are not reflected in the current share price. We also increased our holding in AirAsia. We think yield pressure is set to decline as a main competitor is expected to reduce capacity this summer. AirAsia has now started to deliver on ancillary revenues, and we will now look for further cost reductions which could trigger a strong earnings recovery and a share price re-rating. On the sell side, we sold out of TSKB. The Turkish bank's share price hit a 7-month high during May, and we took the opportunity to exit the position. We also exited from Pacific Drilling, which trades at a premium to new build cost in an industry likely to face near-term overcapacity. Finally, we sold out of Ericsson, Nikola Tesla during the month. We have been gradually reducing our position in the Croatian telecom equipment company and used the strong share price performance and liquidity in May to make our exit. Finally, let's take a look at the fund's largest holdings at the end of May. And we can see that the Kon-Tiki portfolio is attractively valued, with the fund's top 12 holdings, which together represent 44% of the portfolio, trading on a combined forward price earnings multiple of 6.7 times versus 11.1 times for the index, and we see upside of 34% based on our current target prices. That's all for this month. Thank you very much for watching, and for more information, please visit the SKAGEN Kon-Tiki section of the SKAGEN website.